Hey guys, what's up? So this is going to be the first set of videos, and also welcome to the mentorship. So let's get into it. So today I'm just going to be talking about trend identification, bullish, bearish, and the rest I'm going to explain. So let's just get to it. So here we go. So like I said, you know, we have two, three major. Yeah, I just said they are called three type of movements in the market. Okay. Um, Then just do this finish, and then I'm going to explain a few. Okay, so this is bullish. Okay, and then the third one is ranging. If price is ranging in between, okay, it's the third one. So but the two major ones we have here is this one, is this bullish and bearish structure. These are the two major types of trend and type of structure. Just to be precise, I will just call it structure. Okay, this is just identification of market structure with respect to the trend. Okay, so like I said, so as I was saying, sorry about that. So as I was saying, so we have just three type of movements in the market. Okay, but there are two major type of structure. We have the bullish and the bearish structure. Okay, so the bullish structure, this is when price is actually going up, you know, price on an uptrend, while the bearish structure is when price is on a downtrend. Okay, and then we have rangings also. Okay, so now, so now what next is I'm going to show you, I'm going to explain these two structures. Okay, with the bullish and the bearish structure. Now this ranging, there's not actually not much. Let me just zoom in on the range. Okay, just to show just the range only. So yeah, like I'm saying, there's actually not much in the range market. So this is when price is just moving in between. Okay, price just moving in between a range, or in between, yeah, just price moving just in between a range. Okay, every single movement price will do is going to be in within this range, and there's no such thing as a breaker just moving in the range. So the range movement is just indirectly price building a form of liquidity, which I'm going to explain on a later date, in later video I mean. So that's it for the ranging. Okay, so now I'll explain the normal market structure movement, which is the bullish and the bearish. So that's just it for the ranging market. Okay, so okay, this, okay, yeah, back here. So okay, so like I said, this is just the traditional market structure. Okay, this is the traditional market structure. Price going up and price going down. Traditional market structure. So I'll clear this and show you how the normal market structure should look like. I'm going to show you also with chart examples. Okay, so normal market structure, we need price to take a form of liquidity for us to confirm a valid high and a valid low. Okay, and in a bullish trend, price moves higher highs. Okay, price move higher highs and higher low, while in a bearish trend, price moves lower high and lower low. Okay, so that's that for price. That's that for structure on price. Okay, so I think this is a little big, so let's just leave it like this. Okay, I think it's a little big though. So first have a valid high. Okay, let me draw something quick out here. First have a valid high or low. We need price to take out a new structure. Okay, so meaning for me to confirm this is my low, I need price to break this structure higher, and then for me to confirm this high, I need price to take out a form of liquidity, which I'm going to show you real quick. So let's come to the bullish aspect first. Okay, so for the bullish aspect first here, this is price breaking structure. I'm going to also talk about break of structure in these videos, since it is in line with also my market structures. So I'm going to talk about it also. So this is going to be a little bit long. So let's get into it. So now this low stroke this high. That's my confirmation of a low. My low needs to take out a structure. Okay, my low needs to take out a structure to confirm it. That's my confirmation for the low. Now, for me to confirm a high, I need this high to take out a form of liquidity. Okay, so the moment price takes out this liquidity, okay, I know, okay, I've confirmed my high. Okay, because the high took out a form of liquidity, so that confirms my high. Now, until price breaks the high that took out the liquidity, okay, the price breaks that high that took out the liquidity, we don't know where our new low is. Okay, so the moment price this low came up and took out this high, it confirms our low. Okay, this is our low because it took out this high. Now, same thing here. This is a little bit tricky one. But see now, this high here, after price push down, okay, then push back to the upside and then push down back again. The price took out this little liquidity, okay, and then price went ahead to break structure to the upside. Okay, price went ahead to break structure to the upside. Okay, so this is for my bearish, sorry, I said bearish, for my bullish scenario. Okay, this is how I look at my structure in the bullish terms. So as you can see, price is creating um sorry, this is my higher low, higher high, higher low, higher high, higher low, and also my higher high. So that's how price moves. Okay, that's how price moves. So coming into our bearish scenario here, same thing for our bullish. We have price creating liquidity pool. Okay, price creating liquidity pool is literally what we are looking for, because now we are just liquidity traders. We don't move the market. Your little money we have doesn't move the market. Even if you are trading a $1 million platform, you don't move the market. The market is $1 trillion worth of money moving every single day. So you actually don't move it. So you can't predict where price will go. Okay, but you can follow the footstep of the sharks, of the big bands, of the whales. So now what do they seek the most? They seek at liquidity. So in this way, we have a high, a low. Okay, we have our new high here, a new low, a new high, and the new low and the new high. Because with each break of structures, price takes out liquidity. New break, price takes out liquidity. Okay, new break, price takes out liquidity. So I'm going to go into the live chart and just show you how it is on the live chart. Okay, so let's come. This is the 15 minutes time frame, so I'm just going to show you. I'm going to show you the three market movement also. The ranging, the bullish structure, and also the bearish structure. Okay, so let me first go into the ranging. Now look into this here. This here is a range market. Okay, price is moving between all of these. Okay, this is what price is moving in within. As you can see here, this is what price is moving within. Nothing more, nothing else. Price is just moving in within this, creating liquidities. Okay, creating liquidity above and liquidity below. Price will come on a later day, just to grab all those liquidity. Okay, so this is a ranging market. As you can see here, price is just moving in within this box, nothing until we have this break. Okay, but before the break, price just moved. Yeah, price just moved entirely in within this box here. So the price just moved in a range. This is your range. Some people also call it what's it called, accumulation. Yeah, it's price is just accumulating to know where it will go next. Okay, it's the same thing. It's the same thing here. I'm going to talk about accumulation, manipulation, and distribution later date as well. This is just your ranging market. Okay, and then what do we have next? We have your bullish market, price going upward, and then we have our bearish market, price going moving downwards. So now let me show you how I mark out my structures. So let's start from just a new recent market. Okay, this is October. Let's see. Let me just go into the higher time frame just to see if I would say perfect market structure to just be marking up. Okay, let's start from here. Or let me go into a more lower time frame. We have much more example, but it's going to be a little bit hectic. That's what I'm just trying to find out. Okay, let's start from here. What do we have here? We have price break, price fail to take out our liquidity and just continues to move in the uptrend. And then what do we have here? Price takes out our form of liquidity, broke structure. Okay, that breaking structure we are low, we have our low, and then what do we have next? We need price to confirm our high if price takes out this liquidity. Price fail to take out this liquidity and just continue to push to the upside. Okay, let me just go and use the higher time frame or just change PS. Let's use Euro USD. It seems USD card is not in the mood. Okay, so just 1 hour. Okay, so let's get in. Let me just take this bit far away. Okay, I think this is okay. Yeah. Now let me start showing you just right from this low here from me. So as you can see here, price broke structure here, but then I'll show you something. So I'm still going to talk about break of structure. So I'm going to divide these videos into two. So I'll go to post this first, then I'll do another video on break of structures, but I will let me do a quick brief through on break of structure. So meaning of break of structures. Break of structure is when price breaks your previous structure. Okay. In this sense here, we have this as your break of structure. Okay, this with every single low, don't mind the way I just draw it, with every single low broken, it's going to be your break of structure, but inclusive putting it with the market trend. So that's how you form your break of structure. Now for you to have a valid break of structure, we need price to break a valid low with a full body candle. Okay, we need price to break a valid low with a full bodied candle. Okay, so that is our break of structure. If price breaks a low with a wick, okay, price breaks a low with a wick, that is not our break of structure. Okay, this is not our break of structure here. This is not our break of structure, but this here is our break of structure because price broke the full bodied candle. So that's it for this. This is our break of structure here. So let's just continue. So I'm going to show you examples also here. So I think I should be here. So yeah, okay. Now let me just start from here with the identification of trend first and with break of structures. So we know where this is in a bearish trend. As you can see, we are literally in a bearish trend. Okay. Now price broke structure. Now after price breaking structure, what did price do next? After price broke this structure, we know we have our high. Now we need to have our low. Like I said, after price break structure, we need price to take out a form of liquidity. Okay. Now the moment price takes out this high here, we have our low. Okay, and then price broke this low here. My BOSM is my break of structure. Okay, my break of structure, and this is my just my liquidity sweep. Okay, now after price break structure, what do we need next? We need price to take out a form of liquidity. How do we see? Okay, forgot to mark out this I. Okay, now price comes down here, comes back up, comes down. Okay, price hasn't taken any form of liquidity yet. Okay, now what do we have next? Now, okay, let me just take this. Okay, we have AI. Price came down, came back up again, came down, came back up again, came down, came back up again. Now, price has done all those moves. Now, we see this eye here is my liquidity. Okay, this eye here is my liquidity. It's going to be this. Okay, so now the moment price takes this out, I know I have my valid low and then my new high because price broke structure to the downside with this. Price book structures to the downside with this. Now, where else is my liquidity point? This is my liquidity pool here. Expecting price, after price take this liquidity pool out, I have my new low here. So what happened is price change direction after breaking this high, you know, price is moving bullish. So this is coming from, it's turning from bearish, okay? We have this to this to this to this to bullish, okay? We are turning from bearish to bullish. Now, to confirm this high, we need price to take out a form of liquidity. Now, this is going to be a tricky one, okay? Just stay with me, bear it with me here. So now, after price takes out, as you can see, price comes down again and then price goes up. So let me go into a smaller time frame just to show you what I mean by this. I'm coming, okay? Just show you what I mean by this, okay? So let me go into 45 minutes. Okay, here we are. Very nice. Now you can see it clearly here on the 45 minutes. Price, this is a form of structure, okay? I'm still going to go back to the 1 hour. So this is a form of structure. Okay, because this week on a much more lower time frame, I don't want to go lower, okay, but a much more lower time frame, this week is, as you can see, is a form of pullback because this is how price actually went. Push up, push down, push up, push down, and then continuation. Okay, now this low here, my point of liquidity, and you can see price takes out the liquidity. Okay, and then what do we have next? Continuation to the upside. So after price taking out the liquidity, we know this high here is my new high. Now we don't have a new low yet. We need price to break structure. So how do we have my new low? Okay. Now the moment price, this is my break of structure here. Okay. Now if you look at this, this was just a weak break, but the next candle. Let me zoom into this a little bit. The next candle here took out this previous candle high. So that's my break of structure. Okay. So the moment price break structure, I have this as my new low. We need price to take out a form of liquidity. Now, if you remember this type of liquidity that I drew out, okay, okay, this type of liquidity that I drew out, price takes this out, okay. So I'm just to showcase some things here. This is my low price book structure. Where is my form of liquidity here? Of course, my form of liquidity is going to be low. I'm going to be looking to take it from this low. But if you look into this properly, okay, you can see price took out this. Okay, when price took out this, it broke structure to the upside. That breaking structure to the upside, it later overall and then broke this overall structure here. Okay, now meaning my new low is this. Now my new high is going to be this because if you look into this, price pushed up, pushed down, then pushed up back. So this becomes my liquidity. And after that becomes my liquidity, this is my new high, and then this becomes my break of structure. My break of structure, this is my break of structure. Now, after price breaking the structure, do you have any form of liquidity taken out? I'm going to be looking at this little candle here. Okay. Yes, because if you look into this on lower time frame, you see it's a value structure. Okay, price just moves up, moves down, push back up to the other side. I'm going to explain something for you here. Okay. Now, using candles for this. Okay, let me just draw something real quick here. Okay. Now, let's assume we are moving in a bullish form, okay, or in a bullish trend. Now these are just bunch of candles, okay, but now this candle here, let me do something here like this, okay. Sorry. So something like this. Okay. So now this candle here took out this candle low. Now if a previous candle took out the previous if the next candle took out the previous candle low, it's also a form of structure. Okay. If you go on lower time frame, you actually see it more clearly there. In this situation, let me show you this. Okay. Now look at this candle here. This candle took out this candle low, giving us this little low here. Now this little low becomes our new inducement, and as you can see, I just took out the inducement and push to the upside. Okay. Same thing, just continue. We have our high. Price already took out this low, so this becomes our new low, and this becomes our break of structure. Okay. So it's very simple, notification of your trend. So this low push to the upside, where is my form of liquidity? This is my form of liquidity here. This is even it. Okay. Now, like I said, you do not know where price will actually push from until price takes out a low, gives you a lean low. We have our low, we have our high here. Okay, and then this becomes our new low. Okay, now and this becomes my new high because price vividly took out. The structure created a point of liquidity here, and also the structure to the downside. Okay, so this is showing we've turned bearish. Yes, yes. So and now if you continue, so we need price to take out form of liquidity. We have these ones here as our form of liquidity. Okay, let me mark it out. And then we have a new break giving us a low, a high, okay, and a new low after price takes out this liquidity here. Now you might be asking, what about this low? What about this candle here that took out this liquidity? Can't count this as our structure? It can be counted as your structure, but this is going to be your internal structure, okay? Because now our external structure is this: high, low, high. Okay, this is our structure. So any structure in within our high and our low, okay, any structure in within this high and this low here, okay, they are just minor or internal structure until either the high is taken or the low is taken. Okay, so and then that's just its continuation. Now after price gave us this, what next do we have? We have a break of this low, meaning we have our new high here. So what happened next? Rather than for price to continue lower, it did what here? Price broke structure. This becomes my break of structure because now if you look into this, okay, into this it becomes my inducement here, okay, meaning we already have this low here. Also having this low, meaning we have our new high, and what the price broke structure to the upside and continues that structure. Now look here, this is going to become my new high because price took out this liquidity, okay, and what next? The price broke structure. This becomes my new low. Okay, so that's just it on trend identification, knowing your trends, your market structure, and also your break of structure. Remember, your break of structure needs to be a full bodied candle. Okay, a full bodied candle. So let me look for an example of an invalid break of structure. Just straight. Okay, yeah. If you look in here, let me see if price takes it out. Okay, price take it out. Okay, no. Okay, I'm just looking for, okay. Let's use this one here. Look at this low here. Now this low here, okay, what the price do? Price just weak this. This was not a full body candle for us to identify as a break of structure or anything. This was a weak. Same thing here. This is even more neat, okay. This is just a sweep of this eye, not a break of structure. Our break of structure is this, okay. Break of structure is this. This is not even a break of structure. This isn't a break of structure though. That's going to be on a later video for you to identify your valid breaks or something like that. Okay, this is a break of structure because if you go on to the 60 minute. Okay, okay, into your 1 hour. It's going to be clear. It's going to show more clear. Yeah. That's why your higher time frame always is the best place to look at. Now, look here. This was just a sweep of liquidity on the higher time frame. It was just a sweep of liquidity. Okay, it's literally simple. Okay, so right here too was just a sweep of liquidity, not a break of structure. Okay, look at this one here. This one is even neat. Right here, I marked it as a break of structure. Yeah, but now if you look at this, yeah, it didn't break this high with a full body candle. It only wicked it. Okay, but I still mark that as a break of structure. Signify the reason I mark that as a break of structure is because later on price broke with a full body candle. Okay, that's why I marked that as break of structure. So that's just it about this. It's nothing hard, nothing more. Okay, we can't. Okay, look at this also here. Price just took this high. It's the weak. It's not a break of structure. It's just a form of liquidity. So that being said, this is going to end the video on trend identification, which I've just showed you how you mark out your market structure. Same, or it's also the same thing as trend identification. If price is breaking structure to the downside, meaning price is bearish, and it's breaking structure to the upside, it means price is bullish. So it's still the same thing to your trend identification. So in this video here, we did something of bearish to bullish. Okay, so that's it on this video, and also I showed you your breaks of structure. So please have a nice week, gang, and that will be all for this video. And so if you have any questions, just drop. So okay, let me just go quick one with this. Okay, let's look here. Price swept liquidity. Okay, that price taking out liquidity, what do we have next? A new sweep. Yeah, okay, this was first a sweep, not a break. Until what next happened? Price use this candle to break this low here. So there are different ways for you to mark it. You can mark this first one as your sweep, and then after price takes out this second candle low, this becomes your break of structure. Okay, you can mark it that, but I prefer marking it out like this. Okay, this becomes my break of structure, and then price just continue to the downside. If you look into this is supposed to be my inducement there. What price just swept it, broke structure. Other price sweeping is broke structure and continues back in the down direction, in the bearish direction. Same thing here, we took out liquidity, price continues down, broke structure, took out liquidity, price continues down, broke structure. Okay, look here. Now this is even more nice. What do we have here? Price coming back into this to take out more liquidity. When I mean more liquidity, I mean price just comes in, takes out the liquidity, and what do we have next? Price continue in its bearish direction. Okay, same thing happens over and over again. That's why I say price is fractal. The same thing happens over and over again. You see, sweep, break, sweep, break. Okay, price might do this because based on higher time frame, which I'm going to talk about that on a later video. And then what do we have next? We have what's it called here? A break. What do we have here? This is supposed to be my first sweep, nothing. Then okay, yeah, right here is going to be my sweep of liquidity. Don't mind my drawing, reason I use this as my sweep of liquidity. Look at how price is printing. Price is printing higher lows and higher highs. Okay, higher lows, higher highs. Sorry, lower lows, lower high. I mean lower lows, lower high. Now look at this. This already mitigated this. Okay, so I can't expect because this yeah. Okay, I can't expect this year to be to hold price to continue because that already mitigated something. So this year becomes my form of liquidity, a liquidity pool. Then after price take this out, what do you have a new break? And then what next? We still have more breaks, okay? More breaks to the downside. If you go into a lower time frame, you see this as a form of liquidity, okay? So that's just it, a sweep, break, continuation. Not it is not it's not trading is not hard, okay? Break, yeah, we have a form of liquidity here. If price continues though, and if price doesn't, good. So look here, okay, now look here. This is where price turned from bearish back into bullish after price takes that high, took this higher. So simple. Then what do we have next again? Price coming takes out a major low, broke structure. We have an invalid low here. We seen the price takes out a form of liquidity. So what do you have here? Price takes out this liquidity. Still our low here. Continue our move to the upside. Then what do we have? The price hasn't broken any structure. So this is still our major low and this is still our major high. Okay. And then what we have? Price continued. This was what caused the break to the upside there. Okay. And then after that, what continues? Price. Okay, we're even at current price movement. So you know that now our swing point, okay, with price right now, okay, our swing point with price right now is this low and this high. Okay, this is our swing point, this low and this high. Now, have you confirmed our low? Yes, we've confirmed our low after price broke this structure. Look at this, very nice structure that got broken, the full body candle. So this becomes our breakup structure to the upside. Then what else? We need our liquidity. Where? Price give us liquidity now. See, price is giving you everything you need. This is just that because I haven't talked about other blocks, okay? And I've shown you okay on later video I don't want to be just rushing into it. So this is our swing low and our swing high. Anything that happens in between them is just internal structure, you know. This is my low, this is my high. Anything that is in between this high and low are just internal structure. I know I did not explain it properly. I will explain it on a later video or I will explain it later sha. Okay, let me just do a quick explanation on it, okay? Let me do a quick explanation on this, on the swing structure. So for swing structures is nothing hard. Your swing structure is just the movement in between a valid high and a low, okay? So meaning in this drawing here, let me just use the traditional method. So my swing structure is going to be this high, so okay, don't mind my drawing, you know. So this is going to be my swing structure. Now my swing structure is this low here, this high here. Okay, this is my swing structure. So even if I use the way we look at liquid structure here, even if I do this here, price takes as liquidity, you know, and you know, we are pushing price like this to the downside, okay, and then we move structure. All of this like this here and my internal structure. This here, okay, let me use something else. This here is this is just my swing structure. Okay, this is my swing structure. Anything inside of this range, okay, is going to be my internal structure. Same thing for this one here. Same thing for this one here. Okay, same thing for this one here. I'm just going to same thing for this one here. This here is my low and this is my high. Anything that happens in between this low and this high are internal structures, okay, until price breaks either this low or this high. But any move that is happening inside of them, okay, any move that is happening inside this, okay, inside this swing point here, you can call them range. Inside this range, since we're in the range between this low and this high, okay, it's also your range. Any move happening in between them, okay, is your internal structure. They're just internal moves, okay. So you can just capitalize on them on your lower time frame to in this situation, okay. Okay, no, I won't go into much details here. You can just capitalize on this internal structure move to continue your external structure move. Okay, to for price, you just continue the overall structure, your internal structure to external structure, internal, external. It's as simple as that. Okay, so that is what we have here. As you can see here, internal structure. Oh, I say internal. Sorry, external structure. This is my external. Let me take this out. Okay, this is my external structure. This is my external. This is my external structures here. Okay, where's my internal? All this move, all this bearish move here, all this bearish move here, and my internal structure. I mean, okay, all this bearish move here are my internal structure. Internal, since they are moving in within this swing low and this, sorry about that one, and then swing high. Okay, that's where price is currently moving. So until price breaks either this high or this low, we are in within this range. So the only thing, since we are actually bullish, is we are actually bullish in this zone here. The only thing I'm expecting is price to just continue higher. Okay, I'm expecting price to just continue breaking structure until otherwise. Okay, so in this sense, if price takes us this low, it means we've turned bearish and we're expecting price to continue bearish. But price is bullish at the current moment. Okay, even though you have to capitalize on this, on these trades, but never lose sight of the overall direction, the overall trend, which is price being bullish. Okay, price is bullish, so look for your buys. You can capitalize this on your lower time frame. I mean, if you go into your 5 minute time, I don't use 5 minutes though. If you go into your 5 minutes, okay, what do we have here? It's very nice something. We have price taking out liquidity, breaking structure. See, price broke structure, price creates inducement, price creates our liquidity pool. Okay, this will be my liquidity pool here because this has already been mitigated. If you look in within this has already been mitigated. Okay, then what happen next? Wait for price, just wait for price. No cap, wait for price to come and take out your liquidity pool. Then I've talked about other blogs. I'll still talk about it. Then come in here, just expect price, just expect price to just do its due. Okay, it's simple. Trading is simple. We have all these liquidity standpoints here, and just expecting price to just do its due. It's simple. So that's just it about market structure video. I know I've diverted into a few things I'm not supposed to divert into it in this video, okay? But just bear with me. I just love for trading, okay? So just bear with me, and I'll see you in the next video. Peace.